Broader markets, our next guest does predict new tariffs from the president-elect, although he says not likely to derail global economic growth or boost inflation. He believes they will negatively impact Mexico. In terms of 25, sees a year of hurdles for stocks and volatility. Jeffrey Kleintop joins us. Charles Schwab, Chief Global Investment Strategist, joins us this morning. Great to have you, Jeffrey. Good to see you again. Do you believe we can safely implement some of these negotiating tactics?
I do. Look, I'm having a deja vu morning. You know, back in May of 2019, and David, you brought this up, President Trump announced 25% tariffs on Mexico. 5% was going to be imposed on June 10th and then increased by 5% each month until it hit 25% until Mexico dealt with their illegal immigration. So a little deja vu there. But the tariff threat was dropped by the president about a week later, was never imposed because Mexico and the U.S. came to an agreement for an enforcement surge on the border. And that was part of Claudia Sheinbaum's letter to the president this morning, that hopefully they can work together and we'll meet in the next couple of days to address this surge. So I think, again, this latest tariff announcement for day one is designed to extract concessions on these things. And there's plenty of time for Mexico to head them off.
Right. When you say surge, I mean, crossings are hovering near a 4-year low. So how low do you think the administration wants them to get?
Yeah, well, that's interesting. So I don't think there's a hard number that the president is looking for. I think he wants to come across as having more of a rhetorical victory than an actual numbers victory. I think what actually could be even worse for Mexico is the deportations. And I think that even more is more likely than what we're going to see on the tariff front. Look, Mexico got $61 billion in remittances from the U.S. in 2023. And if you take a look at that's like 3.4% of their GDP, if we want to put it in GDP terms. And if you take a look at the number of illegal Mexican-born population in the U.S. as a percentage of that, it's pretty high. That could mean a drag of more than 1% on GDP on Mexico next year. The IMF's only forecasting 1% GDP growth next year for Mexico. I think that could be the more negative impact.
Yeah, Goldman did a nice table of industries that have a high concentration of unauthorized immigrant employees. Landscaping, 19%, crop production, slaughterhouses, construction. You don't see any of that as being inflationary if their workforce were to have a fifth of it removed.
That is where the inflationary consequences come in. No, I don't think the tariffs are necessarily inflationary. Usually currencies adjust to deal with the tariffs. We've seen that again and again. So we haven't seen inflation in the past. I don't think we'll see much this time, but I do think you could see it through this deportation channel and actually affecting labor markets. And we could see, really negative consequences in some of the countries where these workers are sent back to, and then a much tighter market for labor across many occupations in the U.S. And that could continue to push rates up, which is why maybe there are further expectations that the Fed may not be able to cut much next year.
So as the global investment strategist at Schwab, are you recommending buying any global markets, or will it just continue to be U.S. outperformance as we've seen?
Here's the funny thing. Actually, I think international markets could outperform as a result of this. Look, if you look back to 2016, after Trump won, we saw U.S. small cap stocks perform really well. America First policies were all about domestic small cap companies, followed by U.S. large caps and then international and then emerging market stocks bringing up the rear. But the exact opposite happened the first year of Trump's term. In 2017, emerging markets were up nearly 40%, followed by developed international markets leading the way. Lagging were U.S. small caps, and the reason was global economic growth improved. Global momentum in terms of earnings and economic momentum went up, and that meant the more cyclically exposed parts of the market did better. I think that could play out again this time with economic momentum more important than political momentum in 2025.